Joining us right now to talk more about it is Dan Clifton. He is Strategas Research Partners head of policy research. And Dan, what do you think after the posturing, what we heard at the end of last week from the administration here, what we heard over the weekend from the Chinese?
Yeah, well, good morning, Becky. And I would say that we were on a very good path to getting a deal. And last week, we started to see some pressures building into financial markets and questions about whether the deal was going to happen. And it's largely because the Chinese weren't giving the U.S. much room to negotiate. They're basically saying that they want tariffs, the existing September tariffs, to be lowered. And they didn't want to name their agriculture purchases. So the call this weekend was really to discuss those issues. We thought, as Kayla mentioned, there would be a deal by today if there was a Chile conference. That got canceled. So now the goal is to get a deal before December 15th. That's when the next set of tariffs come into effect. Wilbur Ross has been very clear that Huawei will get that exemption if there's going to be a deal. I think he reiterated that over the weekend again. It's really about putting these pieces together. I would argue economically, both sides are aligned for the first time. The China economy is slowing fairly considerably. Their food prices are going up, particularly pork, which is up 100% year over year. And here in the U.S., you're seeing growth slow, swing state employment declining. So both sides are just trying to figure out what could be in that deal to get both sides together. And I think they're going to need a couple more weeks to get there.
You may have their needs kind of aligned at this point, but that doesn't mean that either side is going to say, OK, I'll capitulate to what you want. Is this deal going to have anything in it?
Well, I think so. First, everybody knows about the agriculture purchases, and that's significant, or a delay of the December tariffs, which would fall on consumer products. But if you start to get into reducing the existing September tariffs, you're sending a message to the U.S. business community that not only are there not going to be more tariffs in the future, but that the existing tariffs can come down. That's the confidence measure that we would need to get investment. That's where negotiators are trying to get to. And unfortunately, it looked last week like China didn't want to put structural reforms in place, which is what the U.S. needs to do to actually reduce those tariffs. So that's the big question, whether they can get there or not. I'd say time is of the essence. You mentioned the Hong Kong protests as something that could derail this. You also had a 400-page document leak in the New York Times this week about some of the re-education camps going on in China. Right. All of those external events could disrupt this balance. So sooner would rather be later.
OK, maybe that's the point we should focus in on. The market, I think, has assumed that we're going to at least see no further step up in tariffs, no further step up in kind of the aggravation back and forth.
That's right.
But again, that report in the New York Times, it's good to point that out.
Yep.
The rest of these things that are happening and continued violence picking up in Hong Kong, maybe we should figure out how the market would react if that ends up pushing any deal to the sidelines.
Yeah, and first, let me say that policymakers on both sides have done a very good job over the last 18 months of keeping these events outside the trade talks. But the pressure here is pretty significant. Think about where we are. We're at an all-time high on the S&P 500. We're at an all-time high in our China trade basket. Every time we've reached those levels over the last 18 months, stocks have fallen. The difference here, and I do believe stocks would fall, but the difference here is that both central banks, the U.S. and China, are just pumping massive liquidity into the system this time, unlike, say, in May when trade talks broke down. So there's a little bit of a cushion built into this system until the negotiators can find a way to get to some sort of resolution. But an abrupt change, because of what's been priced in already at this point, would be negative for stocks, all else being equal, Becky.
It's Walter Isaacson. Let me ask you a quick question. How much more liquidity can the Chinese central bank pump into the system, and how much signs of slowdown of the economy there are you seeing?
That's a great question. I wrote last week to my clients that I don't think they can do monetary policy because they have inflation. That's why they need a trade deal. They came around this morning and cut their short-term lending rate for the first time since 2015. So they're sending a message that they are going to do more monetary easing. But I don't think they have a lot to go in that respect until they get a U.S. deal, because as the U.S. ships those agriculture products into China, it will start to bring their inflation down, and then it will give them more cushion on the monetary policy side. So I actually think that this might be in tandem of a trade deal. Some people would argue this morning they're putting more cushion into their economy because they don't think there will be a U.S. trade deal. And we'll see how that plays out.
I'm going there tomorrow for the Bloomberg Economic Forum. So I'm leaving tomorrow for China. And they've actually just announced higher-level officials that are going to come to this Bloomberg Economic Forum in Beijing. Are they using that as a way to try to heal this? dealing with American business leaders.
There's no doubt that they want to at least get American businesses their side of the story. They've been very forthcoming in trying to brief American business leaders throughout this process. But at the same time, they're also going to try and put pressure on American business leaders to pressure the Trump administration to make a deal that may not be as beneficial to U.S. interest. Everybody's trying to get the best deal possible here, and they're going to put pressure on U.S. businesses to advocate for what they're trying to do.